Well, what is going on, guys? It's Mr. Banks here, and I'm coming at you live with a trade recap on how we took SPY puts for 1,200% today. I'm talking about these 398 puts. Want to show you guys how I took this trade so that you can trade like this. But first, I want to give a big shout out to the group. Absolutely ate today. So congratulations, guys. I mean, 2,100 first day, $1,100. $2,400 on the puts. We absolutely hit on that. So congratulations, guys. But you want to know why we took these puts. So let's get started in this recap. Well, first, let's talk a little bit about supply, right? When we talk about supply and demand zones, the first thing we want to look at is the larger time frames, right? Everybody says zoom out and look left, right? Zoom out and look left. Well, today, I am looking at the 1 hour. What happened? We had a nice little supply up here, right? Around 401, 402. How is this a supply? Let's take a look. Sold off, sold off, sold off, sold off. And we came back up again today, sold off. So do you guys understand this supply zone? What does that mean? There's more sellers than there are buyers in this zone. So when we came back up into the zone, what were we looking for? A nice sell off again today. Perfect. So we have that 401, 402, nice supply zone there, looking at the 1 hour time frame. Use the bigger time frames to find these bigger supply and demand zones, and then we'll work our way down into actually taking an entry on the trade. Okay. So after that, after we found the supply zone again and started selling off, what else were we looking at? Well, let's take a look right here. 399 was a massive, massive level, guys. I mean, it was demand. Do you guys see how there's balance here? There's buyers and sellers all in this zone, right? Demand, turn, right? Turn into a resistance, right? So we had a strong support on this 399, and then we started to have it become a resistance, guys. You see that? Support, turn into resistance, turn into support again, turn into resistance, and we came down a day, and then we rejected this 399 level massively. So when did we take puts? Well, let's go ahead and look down at the smaller time frames. I mean, you guys can even see right here today, right, how massive this 399 level was. Well, we had 397 was a big level, but this 399 level was absolutely massive today. As you can see, right around 398, 399, right? 399, looking at the 15-minute time frame now, we can see that we could not get above this, right? We could not get above this level here, and we ended up selling off. Now, let's talk about supply and demand zones when we get into these smaller time frames. So we need to understand what they are. Supply and demand zones are usually where there's a lot of balance going on, right? There's a lot of buyers and sellers creating a nice balance. So what do we see here happening today? Well, obviously, we had a nice supply, like we talked about on the 1 hour time frame right here. And once we go down to the 5-minute, what else? We're looking left again, guys. We're looking left to see where there's supply. Well, we can see that this 399 level was absolutely massive for a supply, right? So we can go back a couple of days. What happened when we got into this 399 level? Well, sold off, sold off, sold off, sold off, sold off, sold off, right? Little demand, and then we start selling off again today. So guys, we have to understand how to find these zones, right? You'll see these zones when we have a nice balance and then they move up into them or we move down into demand. You can guys see we have a drastic move up, sold off, drastic move up, sold off, drastic move up, sold off, right? So we have a major move up into the zone, into this supply zone, and we're selling off. You guys can see that, right? Massive move up, sold off. You guys are seeing that? Well, that's how we knew that 399 was also a major, major level today, right? So supply and demand broke it down from you from the 1 hour. We went down to the 15-minute and now the 5-minute time frame. Another thing we were seeing on a technical standpoint from today was, right, we double topped here. We could not get above that 401.50, the 402 level, right? We created a higher low, a lower high, right? Double top, lower high. And then what happened? We started creating all of these bear flags, right? Bear flag, bear flag, bear flag, bear flag, right? And it ended up selling off. Now, let's get into the particular strategy that I use, the BBR strategy. What does that stand for? Bounce, break, reject. Now, what I use for this strategy is going to be the 200 EMA. It's going to be the 8 EMA, the 48, and the 13 EMA. What am I looking for in this? Let me remove these real quick for you guys, make it easier to see. Now, what am I looking for in this strategy? Let me break it down for you guys. 200 EMA I use as my long trend, right? As my big trend. So I'm going to go ahead and type that out. 200 EMA. If we're above, that's going to equal bullish. If we're below, that's going to equal bearish. Perfect. The next thing, 13 and 48. Now, this green line right here is going to be the 13 EMA. This red line is going to be the 48 EMA. So how do I use these? Well, if the 13 crosses up over the 14, that equals bullish. And if the 13 crosses down over the 14, that equals bearish. You guys got it. Good job. So 13 crosses up over the up there, right? So we have the 200 EMA now. Above equals bullish, below equals bearish. Now I use the 2-minute time frame to take my entries, guys. This is on the 2-minute time frame. The 13, if it crosses up over the 14 EMA, that's going to be bullish. And if it crosses down under, I should say, sorry guys, down under the 14 EMA, that's going to be bearish, right? It's going to be bearish. So from here, what can we see going on? Well, I can see that once we double topped here and we started to get really, really weak, we had these nice bear flags happening. But how do I use these EMAs? Well, let's take a look. We had the 200, right? The price now started going below the 200. And guess where it started going below? You guessed it. We bounced right off of it at the 399 level. Now, you guys saw that when we were looking at the supply and demand zones, big support and resistance areas, that 399 was massive today. And now look what happened when we got to 399. Well, we had a massive bear flag into it, right? Massive bear flag into this 200. So what is that? We're now below it. We're bearish. Good job. We're bearish now and we're rejecting massively off of this 200 at a massive level. So that's that's called a confluence, right? So confluence is where we have multiple things adding up to give us a high probability setup. So right here at this 200, price is now below. Perfect. We got a bearish check mark on that. We had the 13, this green line crossed below the 48. Now we have two bearish symbols going for us, right? Two confluences that are on the bearish side for this strategy. We're below the 200, the 13 crossed under the 48. Perfect. Two confluences to bearish, right? Bearish, bearish. Now what happened? We had the bear flag reject off of the 200 on a massive level. So guys, this is why levels become so important, because usually there's going to be either a bounce if we're going to the upside at a certain massive level, or we're going to have a reject like we see right here at a massive level. And we're seeing that right off of the 200, right off of the 48 at that 399 level, right? Nice bear flag into it, massive reject. So This is why you need to understand how to find levels. It is so important to have your levels marked. So we had a 399 marked, right? We didn't take the trade here yet. This would have been a nice trade to take. I mean, so another reason for today was 399 was if we take a look here, just for the intraday look, where was this 399? Well, we could see that this was this is really where we broke out, right? Retested it, went to the high of the day, still above. And we could see that this 399 intraday also was really acting as a nice support level. I mean, we came up here in pre-market, we held it again, went to the higher day. So this is showing you that this 399 level is a very massive support line, right? At least during this intraday while we're above it. And then we finally broke below. So once we broke below, what do we know? We know that the support resistance flip happens all the time, right? We'll have a support resistance flip, either to the downside or to the upside, right? Support will turn into a resistance if it's major, and a major resistance will turn into a major support, right? Well, in this instance, we're headed down. So if we are headed down, we can see that this major support is now turning into a major resistance. So we had this final support here, small bounce, creating lower highs, which was another indicator that we were heading down, like lower highs, lower high, and we finally broke, right? So this zone right here, if we take a step back, we can see that this zone right here was a nice, massive demand supply zone flip, right? We have a good balance here, right? Buyers and sellers, buyers and sellers. We dropped down, right? And then this held its demand down here. And we came back up, buyers and sellers, and then we finally broke above and headed higher. So we knew that this zone, right in that 399, 398 level, right, was a massive demand. And we can see that right here, right? We absolutely came down to this demand and created a bear flag into this 200. So let me step back real quick. We are below the 200 EMA at this point. The 13 has crossed down the 48. We know that 399 is a major, major level. It was a major support. Now it's turning to a major resistance. We have three major things going for us. We have a major reject here off of a bear flag into this level. Perfect. Now, where do we take these puts that went 1200%? Well, I took them right down here. Now, the 13 I use as my level to take either a bounce if we're headed up or a reject if we're headed down. I really want to use the 13 over the 48. So when we came down here, we rejected the 200 and we started heading down. Once we had this reject and could not create a new high from this drawdown, right? We were also in this demand zone, right? This massive demand supply zone, right? Which has now turned into demand. So bouncing off of this 13 is where we took our entry on these 398 puts. I mean, if you guys look, lower highs, lower high, lower high, lower high, right? We're just on this nice downward trend. And every time we break a massive support, right? Every time we break a massive support, so we had a nice support here on this bear flag. We broke down and we could not get above it. You guys see that? I mean, boom. Sorry. All right, it's not letting me. Right. So see that major support, right? We had a crazy bounce right here. And once we broke below, we couldn't get above, right? So that's telling me that this is super, super weak at this point. So we're below the 200, bearish. 13 has crossed below the 14, bearish. We rejected a major level at 399, could not break back above, bearish. And then once we hit this demand supply zone here, we couldn't break back above on this major bounce, right? We failed to get back above, and then we're rejecting off of the 13, bearish, right? So all of these confluences are giving us a high probability setup, right? Trading is about trading in probabilities, right? We need to use things where we can create a high probability setup, right? We're not just guessing. We never know for sure if we're going to win or lose on a trade. That's a risk that you have to accept. But what we can do is use these things, use confluences to create a high probability setup that we will win in the trade, right? We don't know for sure, but this is a high probability that we will. So at this point, I mean, this was a very high probability that we're going to head lower. I mean, absolutely sold off today. I mean, you could just take a look, over 1,200%. Massive, massive, sorry about that. Massive move down. I mean, breaking all levels, going all the way down about 390 today. So now you ask me, how do we stay in this trade once we took it? Well, great that you asked. We're going to use the 8 EMA now as our trend, right? Our trend is our friend until it bends. So 8, I now look at the 5-minute once we were in this trade. And now I also look at the 15-minute once we were in this trade, right? You can use the 10 too, but we got into this trade right around here, right? Perfect. We're in the trade. Look at this 15-minute. I mean, we can now use this 8 EMA and stay in this trade, right? Stay in runners. I don't mean stay in this trade as your full position. We're obviously going to trim along the way, but you can now stay in this trade with runners for as long as until this trend breaks of the 8 EMA, right? Use the 8 EMA as your trend indicator. And you guys can see right here using the 15-minute, right? Boom, we're in the trade. We can literally stay in this trade risk-free until we break this 8 EMA. I mean, the first 15-minute is showing you that money trend. 5-minute, we might have gotten out here, right? We really would have waited for a 5-minute candle to break and hold above the trend to get out of it, and it didn't, right? So created another bear flag. Guys, we took the trade all the way up here. We could have, right here, we could have stayed in this trade using the 8 EMA on the 5, the 10, or the 15-minute time frame until we broke a candle. A candle broke and held above this 8 EMA trend. So use the 8 EMA once we are in the entry to take that trend, trade, and stay in runners until that trend breaks using the 5, 10, or 15-minute. And as we know, we're using the 2-minute to take our entries. Now, the last thing I want to talk about when we're using this BBR strategy is divergence. Now, what do I mean by that? Well, let's take a look. What are happening? Get rid of these lines. What are happening with the 200, the 14, and 200, the 48, and the 13, right? Divergence. It's pulling apart. So when you guys see these moving averages pulling apart like this, that's showing you that a trend is formed, right? Showing you there's divergence, a trend is forming. Now, if you guys take a look right here, when it was kind of choppy, what's happening with these moving averages, right? They're all bunched together, right? They're all intertwining together, right? That's showing you that there is no trend happening at that point. Moving averages aren't good to use when we're kind of in a chop, a range, right? It's not going to show you a trend. We're using the moving averages to find a good entry on the trade and then using them to see if there's going to be a trend. And when these moving averages start to diverge, pull apart, right? We can see that a nice trend is starting to be formed. But when it's not, and it's kind of choppy and rangy, right? They're all bunched together. So that was another indication as to why, or another confluence as to why we took this trade right here. We could see that the EMAs are also pulling apart, right? You guys see that. So let me just recap super quick for you guys. We're below the 200 EMA, bearish. 13 crossed the 48, perfect, bearish. We're creating lower highs, perfect, showing us that a downtrend is now starting to be formed. Nice bear flagged into a major level, as we saw on the bigger time frames. At 399 was a major level. Let's go to the 1 hour, right? See, this was a major support, resistance, support, resistance, trying to find it as support for that nice move up, resistance, resistance, resistance. And then right here, resistance again. You guys see that resistance, resistance, support. 399 was a massive level. We looked at on the larger time frame. So below the 200, 13 cross the 14 under, bear flag into this 200, right? Into the 200 EMA, as well as this 399 massive, massive level. And we rejected. And once we came down and failed this big bounce that we had on this bear flag, we now were able to cross under the 13, and we took this high probability setup with all these major confluences. We're in this supply demand zone, rejecting off of this 13, and we took those 398 puts over 1,200%. Hope you guys enjoyed this. Give me a follow, comment if you enjoyed this video, share it with your friends. BBR strategy. My name is Mr. Banks. Thank you guys for coming to today's lesson. Let's all become good traders. Believe in yourself because I believe in you. All right. Love you guys. I will see you later.